Shares of Lyft, they're higher today. Guggenheim upgraded the stock to a buy, saying the company can reach profitability sooner than expected. Firm sees almost 20% upside for the stock. It's our call of the day. Josh Brown, the former Uber investor.
Yeah.
What about this one?
I don't. I like Uber. I still like Uber better than. I'm not in
words for something.
I'm not in either name. No, don't worry. I still like Uber better because I feel like Uber is more of a platform, and Lyft is like a taxi and limousine company that happens to have a really great app. And I'm still going to feel that way for a long time. The way they get to their numbers, 15 times EBITDA in 2020. What are they saying? 2023. I mean, that's what we're doing now. This is what we're investing for. So this is not
21 instead of 23.
Fine, great. It's 2019. I got other things to worry about. I got bills to pay right now.
Yeah, but I mean, you were willing to do a short-term deal on Uber.
Yeah, not for this. Because if I put in a short-term trade on Lyft and then I'm in the trade, I don't feel like there are as many catalysts as there are in Uber for other things outside of just ride sharing to happen.
Okay.
Ride sharing is not a great business. I don't care how much scale you have. Uber's got other things happening like Eats that I do think have bigger potential. Lyft is like, hey, we'll
they have
we'll
the
get you a
bikes in
taxi.
Chicago. You see the bikes in Chicago?
You're out of Uber now, then?
I have no position right now. I want to get back into Uber, but I don't have a reason to.
No, not yet.
You buy Lyft? You buy this upgrade?
Nope, I don't. I don't think either of them are on a good path right now, Scott. But of the two, yes, I agree. Uber is in better shape than Lyft.
The amazing part of it is the analyst community thinks that they're in good shape. It's remarkable what the analyst community thinks of the stock. $73, I think, is the 12-month price target for Lyft. 51 for Uber. There's about 35 analysts covering each. 23 to 24 is the number that have buys. There's only 2 sells. The street loves this.
How many analysts that don't work for investment banks that took part in the public offering have a buy rating on the stock? I don't know offhand. I bet you the answer is 0.
And we're supposed to buy it on a return to profitability.
But let me ask you this. Everybody sort of says, you're at least a couple years off from profitability, right? There's no guaranteed roadmap that says we're going to be profitable in X year. So if you're a longer term investor, 2, 3, 5 years, nobody sees this as
There are no barriers here.
Positive risk reward?
There's no barriers to entry here for me.
No, but you have 2 established players. Of course, anybody can start.
But that's the problem. You're paying a valuation now that assumes that all of the rosiest projections are a done deal. Like, that's what you're already paying for that. So if you say to me,
well, isn't it that way with most of these types of stories? You are willing to pay a premium valuation.
Now here's the difference. Yes, now here's the difference. The ones that work continue to surprise even to the upside while they wait to get to the financial metrics. They're getting there with user metrics. They're getting there in such a way that people have more and more comfort. Lyft came out of the gates and disappointed.
Scott,
so why would they get the benefit of that doubt?
Very short and sweet. Uber had a really hard time filling at the $60 billion valuation when they went out to the markets and basically said, please, and we all saw it because they called every one of us saying, do you want shares? When that happens, that's a really bad thing. And yet, when they came public, they said, well, here we are. We're a $100 billion company. No, they're not. And no, they're not 60, even though they're hanging there right now.
You know what they based that valuation on? The last round of financing they did before the IPO.
Yeah.
That's all it's based on.
I don't know why you buy a high volatility stock that's not making any money when we just talked about what we're looking at from an economic backdrop right now. I don't think, to your point, Scott, there might be a time to buy these stocks that are innovative and potentially can continue to offer growth. But right now, if I'm going to put my money where my mouth is, it's not going to be in a stock that's not going to make me any money and could potentially see a pullback in customers over the next couple of years.